Hello and welcome. It is Monday, the 29th day of May, 2017. My name is Derek and welcome to today's video, which is going to be that covering the Bitcoin to Ethereum ratio. And we're looking at a chart going back to 2016, January the 1st of that date, or the last 518 or so trading days using data from the Kraken exchange. You can go to any exchange and see the opposite end of this chart. But for this example, we are going to look at how many ethers you need to tackle and get one Bitcoin. And within this chart, right off the bat, from the start of the year in 2016, boom, 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 over 500 down to about 20. I'm going to be calculating some Fibonacci downside and such, but it's going to be difficult when it has a move from this level here on its original outset and then contain this sideways action for a good year or so. This is where Ethereum was losing some ground. Bitcoin got its dead cat bounce, or its failed rally, as markets usually have or encounter after such a large downfall. But then after having this move in here, falling below and going sideways, and then boom, breaking down below and then going sideways again. So it's had time to correct since about period 446. It's like 60, 70 days of going sideways. Now what we're going to do is just eliminate the early data so we can see this a little more clearly. And now we're seeing the move down to this low, which within here we can see it's after its fall, the sideways correction where the ratio staying within about 2 dozen and about 5 dozen, or 24 to 60 in that area. And then Bitcoin has its big move, Ethereum just losing ground. And there's that dead cat bounce, that failed rally. And immediately after the rally, when it goes up to about 140, the fall, you have the sideways movement in here, the fall, and now the sideways movement within here. The difference within this sideways movement and this one is that this sideways movement contains a downtrend, or excuse me, a sideways range where this one has the downtrend within it. Now what we'll do is we will take a look at what the key lows and highs happen to be for this. And we got around 27 for the low and about 130 as its high. Now calculating Fibonacci downside within that number will get me about 10. Right now at about 12. And if I calculate Fibonacci downside from here to here, I get about 12, which is where it stands right now. But I'm sure there's different pierces, maybe a little bit. But the question I ask is, does it have a chance to not only become par value, but even worth twice as much as Bitcoin? Well, a move down to here, to the bottom end of this area, is nothing compared to this. And of course, what was shown on the outset of this chart, well, that was just huge. But just comparing the move from 130 down to 25, losing a good 6 times its value going down, well, that is a pretty decent sized move. And well, actually it's like 130 down to about 18 that it fell from here to, well, this point in here. Let me just eliminate the markings on here. But when it all comes down to it, though, it's been stated within the Webbot reports, Ethereum's going to have some very big gains in which, don't be surprised if it doubles again against the price of Bitcoin. But we've seen these wild moves occur where just going from here to here, huge gains in the price of Ethereum over Bitcoin, that once if it breaks this correctionary range to the downside with another leg lower, we see on the outset, we see on this, that having a move that comes down to the 5 mark, down to par, even a half, Well, that would not be a surprise when we're looking at the current volatility that we're seeing it within this measure. So thank you for tuning in to today's video and have yourself a great week. Bye-bye.